Sounds good. Got it.
Hello, good afternoon.
Good afternoon.
Welcome to Multifamily on Zoom. We truly appreciate that you're here. So today we're going to be talking about insurance in real estate. And I'm sure many of you have heard what's going on and what's happening, and you may have a lot of questions and concern. We are in the last quarter of the year, and we have not seen anything differently. But today we brought Reginald Mahadeo. Reginald, I hope I'm saying it well. Junior here. He has been in the insurance business for a long time. So today he's going to give us his perspective of what he thinks is happening. Let me read a little bit of Reginald's background and biography. Reginald was born in Jamaica in the West Indies. He has 2 kids, a boy and a girl. He has a bachelor at Texas A&M University and his master's from Oklahoma State University. He's part of a philanthropy board of a nonprofit called the Seedling Foundation. He can tell us about that a little bit more. And he does have some accreditation in real estate, in insurance. He has either owned an insurance agency or owned an insurance district since 2004. So he has been a long time. His current agency has about 10 people on staff. They specialize in commercial property, specifically habitational. And his staff also does personal line, home, auto, life, annuity, mutual fund, bonds, etc. He said they are appointed or broker insurance business in the lower contiguous 48 states. And he also holds a PNC, life and health, Series 6, 63, and 27 license. I have no clue what those licenses mean. Reginald can speak to that if he has time for that a little bit when he starts. But Reginald, thank you for being here today. And I met Reginald at a conference in San Diego, I would say a month ago. And exactly a month ago. So today we were able to have him come in here to talk to us and be part of this meeting and educate us on what's going on the insurance business right now. So Reginald, tell us a little bit about those licenses and Seedling Foundation before we get into insurance.
Okay, thank you so much, Sue. I sure will. The Series 6 and 63 just means that I can sell securities, so mutual funds, and I can set up IRAs and simple SEPs, 401ks, things of that nature. The 27 means that I can manage people that can set up those type of accounts. And the Seedling Foundation is a foundation that is specific to Austin, Texas. And what it is a foundation where we provide mentorship for children whose parents are incarcerated. So basically, we're trying to break the cycle. A lot of times you see kids and they're acting out or not acting the way you think they should be, and you don't know what's going on in their lives. And a lot of times what we found out is the kids have a parent that, has fallen to bad graces and difficult things are happening in their lives. So we try to step in and then provide that mentorship to allow those children to be able to, to be productive members of our society.
All right, great. So now we're gonna, if you can put your computer on speaker view so you can see the speaker. We're gonna also have some slides loaded up. We can start loading up the slides so Reginald can start talking. But Reginald, what we've been, us in real estate for this year, we've been having a lot of up and down going on, but one of those elements is insurance. And whether you have a claim or not, this year your insurance is been going up 20%, at least 20%, in the real estate industry. So some people have seen 3 times the insurance, and us, especially if you're in the coastal area, and us that are underwriting, a lot of those underwriting don't make sense. And insurance can be, not only we have interest rate going against us, we also have insurance, which is one of the biggest factors right now, raising price of multifamily. So what can you tell us of that's going to happen? We have a lot of people here. Some of them are investors or aspiring owner-operators, and LPs, GPs. So those are the people here. So can you tell us what's going on in the insurance industry and what we're going to be seeing going forward? Is there any hope?
Okay. Well, thank you for teeing me up like that, Suze. And I'll start off by saying there's always hope. At the end, I'll talk about what could be done now. But I'm going to be realistic also. There's no short-term hope or short-term relief in terms of premium for insurance. And the slides that I put together kind of give an idea of why. So, I'm going to give the doom and gloom, but I'm going to try to give the reasons why. And if I can get the next slide, it gives the briefest synopsis of it. There are 4 factors in insurance that drives premium. And those 4 factors are claims frequency, claim size, the reinsurance market, and interest rates. And I see the slides aren't up yet, but I'm gonna keep going if that's okay, Sue.
Okay, that's fine. Yes.
Okay. So when we talk about claims frequency, what we're really talking about is how often are claims happening. And the insurance industry is based off of something called the law of large numbers. And so they take what's happened in the past and they put it in the algorithms to determine what's going to happen in the future. And what we have is a trend line that is scary for people that provide insurance for you. And if I just go back to like 2020, in 2020, we had 22 different billion-dollar storms. So each one of those storms are over $1 billion. 389 catastrophes, 15,000 people died. I'm on the next slide after this one. 98.4 million people worldwide were impacted by storms and $171.3 billion in losses. And when I throw those numbers out, it doesn't sound significant, but that was 2020, and it actually increased in 2022, in 2021, and it kind of leveled off in 2022 in terms of the amount of storms, but not in terms of the devastation. And what's happening right now is when devastating things happen, you don't hear about it as much. And just let me put that in perspective. Everybody heard about Katrina, right? Big storm. Everybody heard about the storm that hit New Jersey. But most people don't know that last year was one of the most devastating storm years in the history of insurance, because it's happening so frequently now that it's not always making the news. So that's claim frequency. And as I go through these 4 things, let me say that if any one of these things is out of line, insurance rates needs to be raised. Any one of the 4. Now, next slide, I talk about the claim size. Last year, that $940 number, that is how much money, if you multiply that times the amount of homes and property in the United States, each person that owns a home or property would need to pay $940 in order for the insurance industry to pay out all the claims that were made since 2017 to 2022. 75% of the storms that happened since 2017 were covered. The other were people that just self-insured themselves. And just last year, $121 billion of property loss happened. All of that not covered by insurance. So the size of claims has gone up dramatically, in small print, what you can't read there is that since I think it was, I can't see my own writing, but I think it's 2016, there was $2.8 billion worth of claims. Now, the interesting thing is more than half of those claims happened in the last 3 years, 2020, 2021, and 2022. So when they think about the trend line, almost most of all the claims happened in the last 3 years. And that's one of the reasons why you're seeing this significant price increase. Can I get the next slide? Now, the next slide talks about reinsurance. And I'm gonna try to give you an idea of what that is. So when you to insure a property or apartment complex of 4-plex, 8-plex, 12-plex, 30, 100 unit, you buy insurance from your local agent. That local agent gets the insurance from a carrier. Once you purchase it, the carrier buys what's called reinsurance from one of those 7,608 carriers worldwide. There's only 7,608 of them, and there's not many of them that does multifamily. When you break it down to multifamily, it's like less than 30 carriers. So basically, worldwide, there are 30 companies that actually back your business. And the way they do that is then the insurance company then has a deductible. Usually it's like $100 million. They pay the first $100 million, and then after that, the reinsurance company pays for your claim. Well, that next number you see, 10 to 50%, that is the increase in premium that happened last year or this year from reinsurance. So in other words, the reinsurance company is charging the company that you buy insurance from 10 to 50% more than they did the prior year. And Sue's mentioned in the beginning in her intro that you're seeing sometimes 10%, 20%, double or even triple the cost for insurance. And she's hit on something that's very accurate. When you see 10 to 50%, or whenever you hear of an insurance company say, our rates are going up 10%, 20%, that is what is called the base rate. Base rate. That is not what we call the street rate. The base rate means before we do anything else, before we take claims in the situation, before we take your normal rate increase, we're going to raise 10 to 50%. Then on top of that, we're going to give another raise based on the property and its age and a whole bunch of other factors. So that's why it looks way worse than 10 to 50%, because that's just the base increase. Now, I don't want to paint doom and gloom. Reinsurers met this year in September in Monaco. That's where they meet every year because they're rich. They indicated that they hope to start seeing rate relief in 2025. And I want to be very specific about that. Not next year, but the year after is when they hope to start seeing rate reduction. They do anticipate more rate to be taken in 2024. And I'll just say, if a reinsurer anticipates more rate, that means they've decided we're going to take more rate. That's how that works. Now, the next slide is the last of the 4 horsemen. And this one is counterintuitive because you guys probably never thought about this. But the interest rates have an inverse relationship, or they have a direct relationship with your raise in cost of insurance. Interest rates go up, the cost of insurance goes up. And that's because interest rates have a inverse relationship to bonds. And you may ask, well, what does bonds have to do with insurance, Reggie? Well, glad you asked. In order for an insurance company to pay claims, when they take the money from you, by law, they have to put a certain percentage of that money into a secure fund, someplace where they can go reach and get it in the event that there's a claim. What's America's secure fund? Bonds. They put it into someone else's debt. However, when the bond rate when the interest rates goes up, it decreases the value of the bond when you take the money out of bonds. There's some, if it's a 20-year, 30-year bond, it may not affect it as much. But if it's a smaller bond, it definitely, 2-year, 5-year, it definitely affects it significantly more. So what we're seeing now is that the interest rates are going up significantly, which affects you when you try to get a loan, but it also affects the rate of your insurance because the bond rates, the bonds aren't as lucrative as they were. So when the insurance company goes to pull that money out to pay your claims, there's not as much money. I like to say if they put $100 into bonds, when it's time to pay claims, it's only really $80 there now. That's not a one-to-one. That's just the way I think of it. The money is just not worth as much as it was when they put it in. Now, last slide, because everything I said is negative. Those are the 4 pillars of how they do insurance. Any one of those things is out of line and premiums will go up. Unfortunately, for the first time in known history, all 4 are out of line. Every single indicator that they use to determine premium for insurance is way out of whack, which means the premiums related for insurance are going to be high. There's absolutely no way around it. Premiums have been historically low. I know that everyone won't agree with that, but technically they've been historically low for a long time. And basically the chickens have come home to roost. There's no way to pay the claims that come through right now. In some states, if they added all the money that they've collected in the last 20 years and they had one catastrophic storm, they couldn't pay the claims. They wouldn't have enough money to pay the claims. So that's the situation that they're in, especially along the coast. I heard Suze mention the coast, along the coast from New Jersey on down to Florida, along the Gulf Coast, Alabama, Georgia, Texas. If a storm like Katrina hit Texas, they haven't collected enough money in the last 20 years to pay out the claims that they'd have. So now what can you do? When you go to talk to an insurance agent, these are the 9 things that are very, very important because they do underwrite each property individually.
Excuse me,
and it's important to know how old the property is.
Hello?
Oh, go ahead. Yes.
Can you repeat
Yes, Suze.
that sentence one more time? For some reason, your voice I don't know if it's just me, but your voice were hesitating a little bit. We didn't get the full sentence. After you say, what can we do?
Okay.
And you start answering.
Oh, okay, good. Okay, good. So it's very important to know the property that you're going to ask an insurance agent to look at for you, because especially with the age of the property, insurance companies are tightening down what they look at. Many companies won't look at any properties older than 2000. I know that doesn't sound good to a GP, but many of them are not looking at properties that are older than 2000. So when you and that's even if the property has been 100% renovated. So know how old the property is, know when it has been renovated, know exactly how many units it has, know how many units, the maximum amount of units it has under one contiguous roof line. In other words, some companies, they don't want to have 20 units under one roof. They want to make sure you have multiple units or multiple roof lines. Knowing how old the roof is very important, and what the roof is made out of. When it comes to the electrical system, it's important to know if it's copper or aluminum. And if it's not copper, you got to know if it's Alumicon, it's been pigtailed, how did they finish it out? Because today's appliances don't always work well with yesterday's electrical systems. Same thing with plumbing. They want to know, if it's PVC or plastic, or if it's something else that's corroded and could create severe problems for you. And then the guardrails. I've been having a lot of companies come back and they say the guardrails are too big. The concern there is they don't like when a child's head can fit between the guardrails. They just don't like it. So they need some sort of remediation for that. And then rent rolls usually has to do with the clientele. They're trying to find out if a lot of students live there or something like that. So again, there is relief coming or anticipated, but the relief is not anticipated till approximately 2025. Now, I went through that pretty quick. I assume that y'all didn't catch it all because I talked to a lot of insurance agents that don't know that stuff or don't understand. So what can I clarify?
Well, thank you so much, Reginald, for talking to this. Like I said, it was a well-needed talk, and some insurance specialists has been trying to avoid that kind of stuff. To tell you the truth, I've reached out to several people this past year and nobody wanted to come and talk. And again, I truly appreciate you for having you today. However, from what you just spoke, I can see you talking about a lot of risk. Make sure as owner operators or as investors, we looking at the risk that your property may have. Of course, the older the property, the riskier the property, the more maintenance, the more things that may bring a claim. We definitely understand that you're talking about the guardrail, but something like a guardrail, let's say you buy a property where the guardrails, the space are too big. So if you go, your insurance quote may be a little bit big, but if you go and fix the guardrail, will your insurance go lower?
That's a good question. The answer is no. What will happen if you don't fix the guardrail? They'll cancel your policy or not renew you. The assumption is that that risk is an unacceptable risk. So it's either the premium is good or they will cancel you. Sometimes, hopefully, they would have known that when you start because they have 30 days to get off the risk once they accept you, and you don't want that. So it's something that you need to remediate or know about on your own, because even if they accept you, what they'll do is they'll non-renew you at renewal, and you'll have a hard time if you get non-renewed finding a standard lines company to accept you. And when I say standard lines, I don't know if many people don't know what that means. That means one of the major companies with a strong product. They'll force you into a surplus line, and that's something that you probably don't want to have, or you definitely don't want to have if you can avoid it.
Okay, let's say I'm underwriting a property right now, and one of the issues may be the guardrails. I'm going back with that example again. But I do not get the insurance yet, but you gave me a quote in order for me to underwrite and send my LOI and that kind of stuff. And then, but while doing due diligence, one of the things that were addressed was make sure, because we can tell as investors if the guardrails are too big, we know that already. So let's say we ask the owner to pay for it and fix it, the seller, or give us the money to fix it before we go in. So even with that, that will still affect us negatively, the insurance. I mean, I'm trying to see how far this will go.
Right. No, it will not affect you negatively. What you do is you communicate your timeline for remediating the risk with the agent and the carrier. And they usually will give you time to take care of those. If you say, I'm buying this property, and in the next 30, 60, 90 days, this is what's going to happen, this is what it's going to cost us. Most underwriters, insurance underwriters, will accept that as an acceptable risk to be on, because you've given them a timeline and you've expressed that you recognize the issue and you're taking care of it.
All right, that sounds great. If you guys have questions, you can either raise your hand and we can bring you in to ask your question, or you can type it in the comment and we will ask a question for you. Also, you guys can add your information, email, phone number, so you guys can network with each other, because this meeting is also about networking. Let's say you're looking for a partner, you can find a partner in here. And if you guys want to be part of a team or partner, you can communicate that to me. And of course, I will connect you guys with each other and that kind of stuff. But make sure you say what kind of skills do you have. If you're an underwriter, if you're good at due diligence, if you can raise money, you know, whatever your skills are, just make sure you let us know and put your information below so we can interact with each other and network with each other. As far as for me, you guys can follow me on LinkedIn. I'm on LinkedIn, so, and that kind of stuff. So, like I said, you guys can reach out and let us know. For Reginald, you guys, Reginald, we have Reginald phone number here and email. Reggie, so do you do nationwide for multifamily? Or
Yes,
do you just a particular area?
No, we can do multifamily everywhere in the lower 48 states.
Everywhere in the North American space, is that what you said?
Yes, in the 48 states. We don't do
Okay,
Hawaii
48
or
states.
Alaska.
Okay, all right, so you guys hear that. So reach out to Reginald if you need a quote. So how do we get a quote from you? Let's say we underwriting a property. Can we, what do you need from us to get a quote, or you do not give quote until later after the fact, you know, whatever it is, so just let us know. I don't know how you operate.
We will help a team. If somebody sends an email to me, I send a letter, a form back that asks some questions about the property. And then if we have a solid week, we can get you a decent quote so that you can put together LOI in a timely fashion.
All right.
If it's a smaller property, if it's like, 12 units or less, we could probably do it in 2 days. But if you have something 100 units or more and we can have a week to look at it, then we'll get you a preliminary number that you could put in an LOI.
Okay, that sounds great. Do you guys have any questions? For some reason, I cannot see the chat. Oh, I see 4 people in the chat. Okay. Let me see if there's any question for you. Guys, I invest in land. I'm good at fighting. Okay, that's people and putting the information. So everybody here, all the underwriters in here, y'all don't have any question about insurance? Oh, Reginald already addressed everything.
Didn't think I was that good. I was fully anticipating some tough questions.
Yeah, talk to me, people. I'm not listening. Do I have a group of shy people around here? I don't think so. Y'all talk. And if you're new, you don't know too much about this stuff, you can also ask questions. No question is too little or too far away, or, any question you have, you can ask. If you knew you want to ask something. I see a hand raised. I can't, hold on. Let me see who that person is. I can't tell who that person is. Oh, Victor. Okay, Victor, go ahead.
Hi, good afternoon, Reggie and Susie. My question is here in South Florida because I want to do business on my neighborhood. And right now, the prices here per RE Mentor or other company is a little bit higher. So it's really tough for us to do the underwriting, and the prices is getting high. Now, that's one question. The other question is, if in case you had a property and that property is, you was denied by your insurance carrier, what will happen now?
Okay, I think I'll start with the second question. I think you said if you have a property that's denied by the insurance carrier, what will happen now?
Yeah.
So if you have a property, and I don't know if you're dealing with a captive insurance agent or if you're dealing with a broker, But what I would suggest in that case is that that's not your job. Get a broker that can shop multiple different carriers. And then once you have one that you trust, just use that one. And the reason I say that is because for the brokers, there's only so many, especially in Florida. Companies are pulling out of Florida left and right, carriers. So what happens is when you have multiple brokers, every time they go to try to do a quote for you, they run into each other, and the underwriters won't let them do the quote. It'll block them. If you have an agent that's captive, he can only insure you with one company. So let's say State Farm. If State Farm says no, he can't shop you anywhere else. If you have a broker, what happens is he can shop you with every carrier that's doing business. Let's say Berkshire Hathaway, the Hartford, Travelers. He can shop you with all the different carriers, and then he can tell you what each carrier has said. This carrier said no. This carrier said no. This carrier said if you do this, we'll do this, and then you have options. Now, if you have two brokers, what happens is each broker will probably only get to one carrier that they can get to because as soon as they submit a quote, they get locked in as the only person that will be talked to on that account for you. And that may pose problems because now they're going to not work as hard for you because they know that you have multiple brokers, and every time they try to submit a quote, it gets blocked. So that's all you really can do. Someone will pick it up. There's carriers out there that'll pick it up. It's just not easy. And it's probably going to be very difficult for you to Google around and try to find a carrier. It's better to get a broker because his job is to find the carriers. Now, on your first question, I think you said, what do I do about the premiums going up? And that was the premise of my entire little spiel there. There's nothing you can do. If I am brutally honest, the premium has been too low. And what's happening is, if you think about it, if I am insurance commissioners in each state is an appointed position that's appointed by the governor. The governor is elected by you. You tell the governor, don't raise my taxes and my insurance better not go up. So he tells the commissioner, don't let insurance rates go up. And the commissioner tells the carriers, don't let insurance rates go up. But you also say, hey, these carriers aren't paying my claims, they're not paying me enough. So then the commissioner says, you need to pay more. And the carriers are like, oh, we need to raise rates because we're not making enough money. And they're like, nope, you can't raise the rates. You need to pay, but you need to pay more claims. So what's happening is now the carriers are like, look, we're not going to write insurance in Florida. We're not going to write insurance in California.
Oh, you're breaking. You're breaking. You're breaking.
Reginald, you're breaking in.
Can y'all hear me?
Yes.
Yeah, we hear you now.
Now.
And the states are just solutions. So there's nothing you can do about it because.
Okay, we're losing you again. We're losing you again.
The supply and demand has to catch up to each other, and that hasn't happened yet. So the rates are gonna keep going up. I don't love being the bearer of bad news, but it is what it is. You just have to. You can't use $500 a door when you're underwriting a property. You're gonna have to jump to $1,200, and depending where you are, especially if you're along the beach, it may be $2,200 a door. You know, it just is what it is. You have to find that number that you can use and utilize that number for 2 to 3 months and then reevaluate. So sorry to say that, but that's the answer.
Are you done?
You're mumbling.
Or you just disappear? Because you keep on going in and out.
She said, are you done or you just disappeared?
Reginald, can you hear?
Oh, hey, there you go, Suze. I hear you.
Okay.
I didn't. Oh, I guess y'all didn't hear the end of what I had to say.
For some reason, you
Yes,
kind of coming in and out, so I don't know if that's what's going on, but you were in and out.
I'm sorry. Did y'all not get my answer to the gentleman's question?
Yeah, you got it. Now, as a follow-up, because now in the state of Florida, here, the main insurer is Citizen. Now, if you are a homeowner or business owner, they send you a letter that citizen now, for example, citizen is your, because mostly here are citizen. When State Farm and the other company get out of the state. So what's happening now here is citizens send a letter to you and to your broker saying that you are no longer renewing for citizen. You will be given to the local agent here in the state, or out of state insurance company, and allowed to do business here in the state of Florida. So now, but they tell you there in there that their rate is higher by no less than 15 to 20%. So is that really a fair, that you said that the insurance is really low?
Yeah, that's what the situation is. Unfortunately, the rate is too low, and the companies are becoming insolvent. They're literally going out of business. Some of the smaller ones have already gone out of business because the rate was artificially low. Like the government forced them to give you low rates. It's not free market. Think of it this way: it's you're in New York and the government's saying, "Oh, we got rent control." You're like, "Well, I need to charge more for rent." No, you can't. That's what's happening in insurance. The government's literally telling them you can't charge more because we want to get reelected. And now it's to the point where they're making a decision. Hey, we're either gonna charge more or we're gonna leave the state. And the reason they're leaving the state is because they can't afford to stay in the state. They're losing too much money. And to put it into perspective, some of the states like Florida and Texas, they can lose enough money to completely drive them out of business completely. There's I know to the end user it seems like, oh, it's too much. Well, it feels like it's too much because it's more than you want to pay. But what you want to pay is actually less than what their costs are. So there's nothing they can do. You're talking about Florida. Florida has insurance of last resort. And what's happening is everybody's using the insurance of last resort, which is the state funded insurance. And the state's like, hey, we can't afford to insure you, but they want other companies to insure you. And that's why they're forcing you to leave the state fund, because they don't want to insure you either. They can't, they're artificially keeping their rates low and paying the rest of your premium with tax dollars. So that the end user can feel good about it, but it's unrealistic. It can't continue.
Okay, so thank you very much, Reginald, for clarification.
All
Thank you.
right. Thank you, Victor, for your question. The next person is David. Hold on, I'm not seeing it for some reason. If you have your hand raised, go ahead. I believe it's David. For some reason, it's not letting me see. Hold on.
Hey, thank you, Susie.
David, there you go. So I had it.
Yes. No, my question is, are there different policies we should get on a property, or is basically kind of like your property insurance like all inclusive? Because I had one broker tell me, well, you need like the property insurance, then like liability insurance, but I had went to another convention where they were just talking about all the different types of insurance. Sometimes sometimes a policy will leave certain things out that you need to ask for, and they won't tell you about it unless you ask for them.
Okay, that's almost a loaded question, so I'm going to give it to you in generalities. In general, there's two types of insurance carriers. There's your standard lines carrier, and then there's your surplus lines carrier. Your surplus lines carrier gives you a pick and choose type policy, where your standard lines carrier basically gives you a la carte. Think of it this way: a standard lines carrier is going to give you a Happy Meal. The surplus lines carrier is going to send you, fries. Then they're going to sell you a drink. Then they're going to sell you a burger, all separate. what you want to do is if at all possible, you want to buy your insurance from a standard lines carrier. And you could just ask your broker, is this a standard lines policy? And then what you want to get is a business owner's policy, a BOP. They call it a BOP. That is all inclusive. And then they can take things out of it. And you can just simply ask the broker what's missing from this policy. By law, he's required to tell you. Now, a couple things that you want to look at outside of the policy is your umbrella. The umbrella does not come within the policy. So you should, as a GP, you should want an umbrella to protect your LPs and the rest of the other GPs. But a BOP will come with the property and the liability. And you want both. Because yes, you want to insure your number one asset, the property, but you also want to keep your other assets that you have, which is the money you have in the bank. You don't want somebody suing you and then they come after you and take your money. You want to make sure they take the insurance company's money. That's why you get liability. And you can cut costs and save money by not getting liability. That's a fool's errand. That's being penny wise and pound foolish. You definitely always want to get the property covered and liability, because your greatest loss comes from the liability. If you think about it, let's just take a smaller property. I don't know, 24 units, and 24 units cost you, I don't know, 2.4 million, let's say. Well, if you get sued by one trip and fall and somebody breaks their neck, that's a quick million. It's a quick $1 million. That's going to be a really bad day. You want to make sure you have liability to cover that. The umbrella is to go on top of that to make sure that in case you had multiple losses, your property manager is not taking care of things right, whatever it is, that you have enough liability to take into account all the different people that could sue you at one time for one situation. Now, when I say all of that, the next thing that you want is you want to make sure that all your tenants have insurance and they list you on the insurance as an additional insured. That's what you want. You want to be listed as an additional insured. Just like your mortgage company asks to be listed as an additionally insured on your policy, you want to be listed as an additionally insured on their policy. If possible, you would like to be indemnified so that you can't be sued and their policy is always primary. And you can ask for that. That's something that you ask the agent for, that sometimes mortgage companies will ask me for your policies. And you can ask the tenant to have that on their policies as well.
Perfect. And then last question. I had an owner who he's a little bit delusional. So he felt that insurance rates are not going up, that they're actually going to come down before the end of the year, which is when he's trying to close. And what he was trying to do is say, okay, well, if you guys can't get good quotes, he would like whoever, basically whatever offer he accepted, he would add that person on to his policy and then essentially just like transfer his policy to that person.
Oh, great question. Insurance is non-transferable, period. You cannot, here's the thing, like I can't give my insurance to my son. No. Because he has a different insurance rating than I have. And then one business cannot give their insurance to someone else. It is actually illegal. People try it. It is illegal. And when the insurance company finds out that that happens, even though you've been paying the premiums, when the claim comes, you don't have insurance. The only thing that they may do is give you back the premiums because you acted in bad faith by not telling them that you switched carriers. And then what they do sometimes, they add each other as additionally insured. No. You're not supposed to do that. If they find out that they're using the clause in that way, they'll say that you committed fraud. So you don't even want to go there. But yes, there are people that think that they can outsmart. Those people end up in litigation. That's what that is. You go to court and then a judge tells them, no, you can't do that. But it is not permissible. Even to be honest, even if say you have 5 GPs, 20 LPs, and then you switch GPs later, the ownership changes, you're technically supposed to tell the insurance company that as well, because they want to know who are these new GPs and how do they manage properties, because sometimes they ask for the resumes. So if you get new people, you're supposed to let them know. And I get audited, and sometimes they let me know, hey, you told me this person are running this company, but guess what? They're no longer there. You're going to need to make some adjustments. So yeah, that's how that works.
Okay, perfect. Thank you. Yeah, because the broker was actually, the owner told me that, and then like when he listed the property, the broker told us that and was just like, yeah, if, that's what he's trying to get done.
Yeah.
So they were trying to set it up.
Yeah, no. You have to, the broker, I don't want to say, but you're not supposed to do that. That's a big no-no.
He's evil. You could say it.
Yeah, it's illegal. But yeah, not supposed to do that.
All right. Thank you for all this information. So
Thank you.
how about flood? Like, can you explain, because there's different of people here. There's people who have operated, there's people who have not operated anything yet. So if you have, when do you add flood? And definitely flood is not going to be covered under the umbrella. And how do you add flood insurance?
Okay, great question again. Normally your broker can get you flood insurance. It's typically gotten from the NFIP. Technically, the Senate, the senators they're the ones who provide it. It's under the Department of Homeland Security. Now, all that said, there are outside flood companies that are not under Department of Homeland Security that have gotten a lot better of recent. And it's fairly easy to get. You need a flood certificate that tells you the base level of the lowest floor in your apartment complex. It is not, again, it's not usually cheap. It used to be. It was held real cheap for a really long time, but then they became insolvent, and the Senate had to come up with a bunch of money to pay claims. So that's not happening anymore. I will say also, because most people don't ask this question, 70% of flood claims last year happened outside of flood zones. People think if you're in a flood zone, then that's when I need flood insurance. I don't need to get it if I'm not in a flood zone. The reality of it is, when you're in a flood zone, that's when you pay the most premium. When you're outside of a flood zone, that's when you get the discounted rates for flood insurance. It does not mean we won't flood. The 100-year floods happen now every 2 years. So it is smart to take advantage of the fact that you're not in a flood zone and buy flood insurance at a relatively inexpensive rate when the bank is not requiring it. Interesting things to look at, though, if you have a 3-story building or a 2-story apartment complex, usually a flood is only 60% of the time, it's under 6 inches of water in your lowest floor. So you don't need to insure the entire building for flood. You just want to make sure that there's money where you don't have to come out of pocket to take care of that first 6 to 12 inches of water in your building. That's what you should really be thinking about, and how much will that cost you? And you can, run some numbers with your insurance agent to come up with that, depending on the rebuild cost of your building.
Wow.
Now, somebody sitting next to me who's an investor just said, "What about water heaters busting?" A water heater busting is not flood. I know everybody says, "Oh, my unit got flooded because of this water heater." That's just generic terms. The insurance company does not consider that flood. A flood is rising water, water that rises. Water that falls will be covered under your normal property damage coverage, okay? Property damage, not flood insurance. Flood insurance is rising water only. And you may say, well, what about rain? Rain is falling water. If the rain falls, it accumulates and then rises in your building, then that's rising water and that's a flood, okay?
Yes, yes, I had that happen to me. Shireen, go ahead, Shireen. Shireen has a question.
Hi, Suze. Hi, Reginald. How are you guys?
Hello.
Thanks for your time, Reginald. I just had a quick question in regards to the insurance premiums that we underwrite at. I've kind of heard different opinions on how to account for insurance, and I just wanted to know from your opinion, because when you're looking at different markets, obviously the premiums are going to be different depending on that market. So I've heard do 10% higher than what the sellers are doing, do 20% higher than what the sellers are doing, because you have to. It takes some time to get an actual quote. And if you are just trying to get an idea of where you would be coming in at, do you have a recommendation for what you think is a good entry point based off of what the sellers are currently paying for their premium?
Okay, that's a really good question. I meant to say something about that when the last gentleman asked me a question. What happens with the person that owns the property, especially if they've been owning it for 20 years or so, is the insurance company probably hasn't looked at that property in a long time. They haven't audited it. When you buy the property, they're going to come in, they're going to take a deeper look at it to determine what the premiums are. And that usually causes a significant increase in price. 10% sounds like a low number, and I'll be honest, I can't give you a number because I'm just going to shoot myself in the foot. And there's a GP sitting next to me right now, and he's looking at a property in Texas, and they're using numbers between $900 and $1,200 a door. And to me, that sounds reasonable because it's an older property built in the 80s. If it was a younger property, then that'd probably be a little high. Realistically, it's very, very difficult to give somebody a baseline. And I know that a lot of the multifamily groups give people baselines, but the baselines are 90% of the time wrong. It's better to know a market that you're going into. For instance, you're buying complexes in Georgia, and then developing a baseline in Georgia where you can say, in Georgia, I can do approximately $750 a door. Okay, reasonable. Inland Georgia, $750, coastal Georgia, $850, something like that. But for me to give you a number, and you could be California to Florida, or you could be Wyoming, which is, heck, you could probably get $400 a door. I would just be making up a number and giving it to you, and that'd be unfair. You can look at their number, but know that whatever they're paying, yours is probably going to be significantly more. It's like the same with taxes, right? They're paying one tax rate based off of that property, but you just increase the value of the property when you purchased it, and the tax rate's going to probably be significantly more.
Right. Okay. And I just have one more question. In regards to renewing your insurance policy, most times when you go to renew, it's going to go up. Do you recommend shopping to see what else is out there, like reaching out to the broker and shopping every single time that renewal is coming up, just to make sure you are getting the best rate? Or do you recommend, like, once you have kind of settled in with a company that works for you, you stick with them?
I say shop.
Okay.
And that's
Reginald, we just lost you. We lost you. Can you repeat what you said?
Am I back?
Yes. Go ahead.
Yes.
Okay. I say shop. I am an insurance guy and I don't want you to shop me every year, but let's just be honest. If you buy insurance from me and your premium is $100,000 and I get 10% of that, I make $10,000. And if next year it's 120,000, now I make 12,000. And if you're just going to renew it every year, then why should I shop it? Because I have 40 other apartment complexes that I'm looking at. You can call your agent and tell them I want to look at it, and they may very well tell you this is the best I can find. Just ask, show me the top 3 rates that I got. Just ask them. Then you know if they shopped it or not. There's nothing wrong with that. It is our job. I'm not saying you have to change agents every year, because once you find one that you're comfortable with and you trust that person, yeah, you can use that person for the next 10, 20 years. But if it's one that will never shop it and can never shop it outside of his own company, then his underwriters are deciding your rate. He's not doing it. He's just regurgitating what the underwriter tells you. So it would be better for you and behoove you to have a broker that can shop the rate and give you a rate that the best rate that they can find for you in the marketplace.
Okay. Thank you. I appreciate it.
All right.
Thank you.
Thank you, Reginald. We only have you till 3:01, and we have one more question. Please do not do it if you have to run, because I have to be respectful of your time. So do you want to do it, or do you want that person to reach out to you?
No, I'll answer the question.
Okay, the question is, and this is going to be the last question, guys. How does fire, basically, I think the person is asking, how does a claim affect your insurance quote? Or let's say you buy in a building, that building had a quote before, a claim before, for example, fire. How will that affect the quote you're going to get?
Oh, okay. I think the person sitting next to me, the way they understand that question is previous claims. So you're underwriting a property and that property has had previous claims. How does the quote get? And
Right.
it is actually specific to the carrier that is underwriting it. Some carriers do not care about how the prior management took care of the property. They only care about you and your experience and how you take care of the property. But some carriers, they want the loss runs from before, because they feel like the way the property was managed or taken care of before is an indication of the type of clientele that's in that property and how it'll be taken care of in the future. So it actually is specific to different carriers. I have carriers that they don't care. They only want to know what is the current GPs, like how do they manage, how long have they been managing stuff? And if they don't have any claims, they go into it and they say, well, this property has no claims as of now. So they start from 0 with no claims. And then I have some carriers that they're like, no, we want to see what the past 5 years claims history is. And they ask for the loss runs.
Okay. Well, that is good to hear. So thank you so much for your insight. We're not going to keep you any longer. So, and I want to thank everybody who has shown up today. And I want to shout out to someone in here. Again, he's very young. Darian, do you want to show your face? If you can, are you still here? Darian? Or Darian, I don't know if I'm saying his name right. So basically, I'm all about, if you know me, I'm all about young people and mentoring and helping younger generation. He's a 17-year-old. I don't know if he's here, but yesterday I met him a couple of days ago in a RIA, and he was here. He wanted to do wholesaling. I wanted to introduce him to the group, and encourage him. Apparently, it looks like he has left. But he was here for the majority of the call. Yes, so thank you, everyone. So we'll be meeting again. I will let you know. I don't know when is the next meeting. I know I do those things every Saturday, but for this past 2 months, it's been crazy. And I see that people have, some people put their contact and what they're looking for. Some people looking for partners. Some people are looking for people to help them raise money in the chat. Look at the information. And then you can take all this information with you. But Besides that, Reginald, is there anything else you want to add, or you just want to say bye to us, and that will be good enough?
Well, just thank you for your time and thank you for having me. I hope I did a good job of explaining which questions you guys have. And if you need any further explanation, please feel free to reach out. I have no problem with answering questions. I'm on vacation for the next 2 weeks, but I still got my phone and my laptop, so I'll answer any questions I get. Thank you so much.
By the way, guys, this dude decided to be here while he's on vacation. I forgot to mention that. So thank you so much for having you. So reach out to Reginald. Reginald, tell your number one more again. It was in the chat. It disappeared. Put your number one more time again, and then that way people can reach out to you.
I'm gonna get into the chat right now. My office number is 512-879-4701. I'm gonna give my cell phone. Feel free to text me, 832-620-1123. And someone's putting it in the chat right now, so it's in there as well. Thank you so much.
All right, thank you so much. Everyone will be received that meeting, that webinar soon. We'll be sending it out to you. So have a great afternoon, and we will meet again. Thank you, Reginald. Everybody has a great afternoon. Bye.
Bye.
Thank you.